Hey guys, welcome back. In today's video, we are talking about AMC exposing the shorts, the squeeze getting bigger, how shorts are now blaming retail, and many more in this video. Firstly, if you take a look at the dark pool for the past 2 days, what you will see is on the 13th, we had 79.65% dark pool volume. We had over 19 million shares being taken away from us. And then going towards today, October 14th, what we saw was another 75% dark pool volume, where we're seeing 14 million volume getting stolen away from us. And so this is what we talked about. When you take a look at AMC, when you take a look at how it's reacting, you understand why the price is not going up, despite the fact that retail, that institutions are buying AMC, yet we're still seeing the price decline. It's because of the fact we are seeing the dark pool usage being exploited to the extent of close to 80%, and both days it has been over 75%. You can see it once again, 75.29 and 79.65. And so this is how we are realizing just how much panic the short sellers are in. We've always talked about this. We shouldn't judge AMC's success by its price action, by its price reflection, because it is not real price discovery. But instead, we should judge AMC's success by how much the shorts are retaliating and manipulating AMC. Because if AMC wasn't successful and the shorts weren't scared, then there will be no need to suppress AMC, because they can just let AMC go bankrupt on their own. But the fact that they are suppressing AMC and expressing just how scared they are, we know that AMC is doing well. And so this is what we are obviously looking at with the dark pool volume. And once again, for those of you who look at the charts and you see that people are buying yet the price is going down, well, a lot of those buy volumes are being stolen away. And this is why we have to look at the off exchange at all times. And another thing to talk about this, which is something we've mentioned in the past and is still relevant later on in this video as well, is that this previous article talks about how the AMC drama is exposing risks in $11 trillion world of indexing. So we've always known just how much exposure AMC always had in terms of how it can bankrupt multiple companies, how it can easily cause trillions of dollars to go up in flames. And so that's what we are looking at. And so if we say that the shorts have covered, if there are no one who will be affected by AMC, and that this article wasn't true, then we wouldn't be seeing the off exchange at 75%. So once again, the very fact we are seeing off exchange at this rate, and we've realized how much exposure AMC has towards these short sellers, you start to see why everything's obviously making sense and why the shorts are constantly scared and feel the need to suppress AMC. Another reason is the lower the price of short selling, the larger the squeeze. We are close to all-time low, and the number of shares available to borrow has been slowly declining for quite some time now. Not long ago, they were in order of 5 million. And so what you will see is, of course, and this is something we've talked about in the past in terms of why there are more synthetics of AMC than GME. And once again, this shouldn't be taken as a competition, but merely understand the fact that because AMC is cheaper than GME, AMC obviously being at 283, it's obviously easier to create synthetics for AMC. And so we've known, because the price is getting lower, they are able to make more synthetics. But like we've always have said, they can't actually cover these synthetics. And so when it does come to time to cover these synthetics, because they have already created an abundant amount of these synthetic shares of AMC, it would obviously cause the squeeze to get bigger. And this is what we've talked about. The longer this drags out, the higher the squeeze price. And so that's what we are looking at. Another thing to be looking at is obviously the shares availability, where we're looking at pretty much around 200,000. And just like Stefan has said, not long ago, it was 5 million. And we were constantly seeing it being restocked every time, a few 100,000 shares were borrowed or a few million were borrowed. It was constantly restocked. But now we start to see difficulties by these firms that they can't actually restock the shares. So what we are looking at is the demand for these shares are still very, very high, hence why we're seeing the shares availability to go down, but the actual supply is actually getting low. Now, it's not a surprise when you take a look at what's happening. Once again, we've always seen these coincidences happening when it comes to AMC and GME. The very fact that recently we're seeing all these liquidations, we're seeing margin requirements at an all-time high, We're seeing how firms are panicking, how firms have to sell positions. We're seeing everything in the market right now, and suddenly they don't have the extra capital to find shares of AMC, which before, when the market was going well, when the market was going up, when the collaterals were all there, they were having no problems. And when all of a sudden, when the collaterals start to see problems, they are also seeing problems to find AMC shares. Once again, you can make the coincidence, you can see the coincidences, and this is why we've always said is that AMC and GME is in fact is affiliated with so many different things that it could easily affect so many different firms. And it's why we've said with the exposing risk in an $11 trillion world of indexing. Another thing we're looking at is why shorts could be panicking right now, and why I think it could be a big step as well for AMC and GME. You can see this. Genius Group announced today they'll file a lawsuit against market manipulators before November 15th, potentially for naked shorting and spoofing. So this is something we've talked about in the past, and I will talk about why this is important for AMC and GME as well. So for those of you who don't know, a quick backstory is that Genius Group was a company that has faced extreme naked shorting, the likes of AMC and GME, and they're filing a lawsuit against it, in which in the whole time they were preparing for it, they were constantly collecting data of foul play by institutions. So they were collecting any FTDs that were not settled, they were collecting all the naked shorts, the synthetics that were created, all of these things that we have talked about in the past, in which the shorts use to short AMC, to short GME, to manipulate, these stocks. And so that's what Genius Group is trying to fight against. And we talked about why this will be a very big step, because firstly, the reason why I talked about how AMC and GME, when they see something like this and when they see it to its success, this is something that AMC and GME could also replicate. We have to realize is that Genius Group is a much smaller company than AMC. And so this has been happening, in my opinion, and what we've seen in the past, in terms of it has happened for a shorter amount of time than AMC and GME. And so there's obviously a lot more data for AMC to collect. But if we're seeing Genius Group actually have impact on this, if we're seeing somehow regulations to actually help out these companies, to help out retail, to help out the investors who got screwed over by these institutions, then we can definitely see how AMC and GME will be taking actions, because we have seen in the past about why and how they want to take action towards these, but fail to do so because of complications. And so this is what we said that could be a very good start. Now, let's take a look at something that's extremely stupid. And this is something that I can't even believe the shorts have the heart to even say this, which is short sellers blame retail investors for worst returns since 2020. So that's right, you heard it right. As we're seeing, the whole market going up because of whether it's AI, whether it's the economy, these short sellers are losing money, and they're blaming retail for the fact that they are losing money. And you can see Kristen's takes on this is the fact that they ignored so many different things. Firstly, it blames retail investors and shady public companies for short sellers' rough year. But let's be clear, institutional investors move stocks, not retail. The media know this, but constantly blames retail. And I think already we can stop that. Now, we'll talk about everything else, but just looking at this, you already see how stupid of a take this is. Because if they're blaming retail investors to say that retail investors has the ability to move market, then AMC, the stock along with GME that has the biggest retail base, should have the ability to move it to $100, to $1,000, or at the very least, not where it's at right now. And so this is already why we know that they're stupid and that they're just trying to blame the retail. You can see how they always make these takes, and then you can see some of the other things. The article doesn't have one word about the counterfeit shares flooding our financial market. Once again, what happens with AMC? What happens with GME? The article never mentions the cat, the audit trail that has picked up billions of trading errors in a single day. And now this is something we've also covered on this channel. And it's exposing how all of these firms, even though they've already been called out, even before the CAT system was fully implemented, they were already being fined because they were marking trades wrong. When the CAT system came out, it showed just how much of the trade were mismarked. And yet, despite that, once again, they're blaming the retail. And then they also don't talk about how good public companies are being destroyed. Once again, turn your eye towards AMC and GME. And then they never talk about the microcap stock used to hide counterfeit shares. So pretty much everything that we have talked about in terms of how short sellers have destroyed the value of good companies, whether it's hiding counterfeit shares, whether it's the fact that they're using media articles, they're using all of these strategies like dark pool, which we've shown already to attack good companies like AMC and GME, whether it's the fact that we've shown how the CAT system has picked up bad trade, all of these things, they don't mention about how they use it to destroy and damage companies, but they talk about how retail was the reason that these guys are doing bad. And so this is why we said that these shorts have no remorse, and that's why we want and need to obviously beat these guys. Now, as always, this is F Financial Advisor. Do take advice, go and sell. Make sure to do your own due diligence and research, and I'll catch you guys next time.